Welcome to Tradespoon. My name is Vlad Karpel. I'm CEO and founder of Tradespoon. And today we're going to have our weekly strategy roundtable discussion where we talk about current market conditions and what to expect in the market, short-term, long-term. We'll do the macro analysis. We'll talk about some of the recent trades, some of the trade ideas, and answer any questions that you have. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first. Always want to welcome new subscribers. The main difference between Tradespoon and maybe some of the other services out there is that we are heavily concentrated in technology, AI, building neural networks, using latest advances in modeling, financial modeling, to find signals in the market, but also trade them in the live trading room. Disclosures are very important. Please read them. Trading stock and options involve risk, not suitable for everyone. You must be aware of the risk and be willing to accept it in order to invest in current market conditions. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. All right, let's take a look at the market. So looking at the look at 1 day. So interest rates are very important, right? That's kind of, now that earnings season is kind of, finally we know, NVIDIA earnings. The yield is weak, right? So 10-year yield, 2-year yield is, I think we're almost getting to the point where 2-year yield is less than, I think it was almost the same at once. So 2-year is below the 30-year and now it's below 10-year. So you have normalization of the yield curve, right? The way it usually is. Historically, right? Unless you have these inflations and dislocations, then you have this inversion of the yield curve. But the 10-year yield kind of double bottom and still weak, right? We're hovering over this 3.80 line. I think 3.80 is a very important line. The concerning part is that on the good news, right, when we had initial claims yesterday, right, in theory, yields should bounce back, right? And on the bad news, it should continue going lower because the expectation that Fed will have to be more aggressive cutting interest rates. So I'm watching 3.8. That's the year-to-date low. We broke through it during on that Monday when we had that carry trade, right? Then the Bank of Japan announced that they will increase the interest rates. So then it bounced back when we said it's going to increase the interest rates. Then we had a sudden drop in yield when Bank of Japan announced increase in interest rates. And now we're not that far away, right? We were at 3.7, now we're at 3.87. This week we actually were at 3.80. So to me, this is an important line of support, which we want to kind of keep an eye on. We can actually move this line here. Because if we break through the August lows, I think that will put more pressure on the market. Dollar has been weak, right? So that's positive. And following kind of the yield, it's very weak rebound. And usually a weaker dollar is good for earnings, right? For the S&P 500 earnings because of the currency translation. So dollar weak, that's good. Japanese yen is kind of, what do you people say, elephant in the room? So it all started with the scary trade, right? You can see a strong move in Japanese yen. We went from 57 to 65. This is ETF, but it's still hovering near highs, just like yield hovering near lows in the dollar. So I'm watching 65, right? If the Japanese yen breaks through this overhead resistance, I think that will also push the market to the downside. High yield is breaking out to the upside. That means risk on. Usually when junk bonds rally, this is a risk on trade, so that's good. VIX is at 15, so we're back to complacency again. Value stocks continue to outperform. It continued to trade higher. QQQ is struggling with the 50-day moving average, right? QQQ is struggling with the 50-day moving average. It spent a few days below it. Now Marvel, better than expected earnings. Dell, better than expected earnings, so better than expected initial claims. So we're back above 50-day moving average today. Semiconductors are still struggling, right? SMH is still below 50-day moving average, so that's pretty weak. Spiders is at all-time high, very close to all-time high. It's been here for the past 2 weeks, not kind of going anywhere. And small caps are not at multi-year high, but close. All right, so you do have a broadening of the rally and participation, so that's positive, right? Like regional banks. Some of the industrials are continuing to trade higher, so that's positive. Let's see, oil has been weak, kind of signs that maybe global economy is slowing down. Bitcoin also weak, right? Usually Bitcoin goes higher, Nvidia goes higher, QQQ goes higher, high yields going higher. Right now, high beta stocks, right, is underperforming the low beta, right? So we're in kind of in this rotation when the value stocks are continue to go higher, like banks, industrials, insurance companies. But technology stocks like Nvidia is, and Microsoft, they are underperforming. And the Bitcoin is underperforming. It's kind of staying at 200-day moving average for quite some time already. So Nikkei actually broke above 50-day moving average, so that's positive, right? Just like Japanese yen, Nikkei got sold off sharply on that Monday, but it recovered probably half of its losses, and now at least above 50-day moving average, so that's positive. Nvidia dropped below 50-day moving average after strong earnings, but the bar is set high, so they did drop, but looks like it's trying to regain 50-day moving average, similar to QQQ and SMH. And that is kind of a summary of the macroeconomic days. So everybody, now that Nvidia is behind us, right? And everybody kind of said, well, if Nvidia is going to pull back, and unless it's going to start recovering, then that's where the market is going to go. For now, that hasn't been the case. There's divergence between the Nvidia moves and S&P and the value stocks. But we'll see, right? It's just a couple of days, maybe not enough. So we had initial jobless claim that came in line with expectations. So that was sign of relief. PCE data, right? Looks like positive surprise, market continue. I mean, just like CPI, PPI with trending lower, we're going in the right direction in terms of core PCE. So that's positive. Now that we have Labor Day weekend, right? So we do have Labor Day, Monday is off. But then we do have Tuesday PMI data, and most important, I mean, beige book is usually, indication of where economy going, but most important is obviously unemployment rate. That's what caused the market to start selling off, in July, when we announced July day, right? In the beginning of the August, end of July, it pulled back. There was a revision to the unemployment data. Everybody thinks this is just an anomaly. So if we are staying at 4.3 or drop to 4.1, I think market continues going higher, right? If we actually jump from 4.3 to 4.5, right, because we got here pretty fast, well, then the market, I think, is going to pull back, right? And I think that's the next catalyst in the market. So market is going to react to macroeconomic data, right? Any questions? So we need to decide, what do we do in trade? So going into elections, right? September, October, usually from seasonality are bearish time of the year, right? The question is, is the market overbought? But, Nvidia earnings were not horrible. Nvidia dropped 5%. Like daily fluctuation can go up 5%, can go down 5%. Market QQQ is above 50-day moving average. Value, small caps are breaking out. So scenario one, Fed cuts rates, maybe even aggressively, maybe 50 basis points in September. Earnings are still pretty good. Soft landing narrative is the main narrative, and we break to the upside, right, in September, October. Scenario number two, we're kind of trading in this range, right? I mean, we have 510 low, right? We could maybe break through this, maybe false breakout, and then we trade in the range, right? Something like that. Right, that would be scenario number two. We're trading in the range between August lows and all-time highs. And then scenario number three, maybe there is some, unemployment data jumps. Maybe the carry trade is not over, right? At some point, Bank of Japan has to decide whether they want to raise interest rates or not. They already said once they will, so maybe they'll come out in September, October and say, okay, we're going to resume our interest rate hikes. So scenario number three. So do you trade in scenario number? So one, and it's important to go through these visualization exercises, right? Positive and negative, so you know how much money you're willing to allocate to trades and how much risk you want to take, right? If you say two, maybe you build market neutral strategy and you have higher cash. If you say one, then you put bullish positions and maybe less cash. And if you think it's three, then a lot more cash and more bearish position than bullish. Right, you never want to be in the market where you're always long or you're always short as a retail investor. You do want to hedge your portfolio, right? You do want to hedge your portfolio. So BJ, Dan, Kevin, Lewis, Martin, Peter, T, what do you guys think? How many of you say one, we're going higher, we're going to break through 560, maybe 580, maybe 600, 5-7% rally in September, October. Two, no, this is double top. We're losing momentum. Bitcoin is underperforming. Oil is weak. Inflation data is dropping in Germany precipitously. There are signs of recession. So at least we're trading in two, in the range bound. And then three, you basically say, no, soft landing narrative is not the main narrative. The main narrative is, we're approaching recession. So three. Politics are in place. There is a lot of these theories, right? Theories that it's the government manipulating these numbers, right? It ticked up, then we're coming close to election, so they do these revisions. Yeah, I mean, okay. I mean, we'll see, but there's definitely some. If majority of the people think like that, well, that will move the market. If not majority of the people think like that, then it doesn't move the market. Martin 1, done 2, maybe 2 until after election, uncertainty clear. Kevin is extremely bearish. Okay. Okay, so most of you said, I think, let's see. Well, some of you said 3. St. Peter, thank you. It's equally divided, actually. I can't see the pattern. I don't have too many people right now, but it's equally divided between 1, 2. There's some 3s, right? So I'm gonna go with 2, right? I mean, you can make a narrative, right? You can make a case for the bulls that it's gonna continue to rally, but I think value stocks definitely breaking out. So VTV, kind of a clean breakout. It makes sense to, at least on these low beta stocks like utilities, consumer staples, healthcare, banks, industrials, that's, Costco's of the world, Walmart's of the world. Then maybe, yeah, you go along, right? You go along because you have a clear support level, right? You have a clear support level. If it's a false breakout and we drop below this line, then then probably market is going to pull back more. But as long as we're above this line, at least value stocks are in a strong momentum and going higher. And QQQ, you probably want to decrease your allocation to technology because it's struggling to even bounce off of 50-day moving average, despite Nvidia earnings and Marvel and Dell and all of the earnings. So in terms of earnings, CRM kind of didn't go anywhere, right? Pull back. HPQ is flat after earnings. You have Marvell jump to 78, unable to sustain its gains. You have Dell jump, unable to sustain in gains, and you have MDB kind of struggling to. Oops, sorry. Struggling to bounce back. But strong rallies. So if you do have a positive surprise like MongoDB, then at some point we were up 20%, now we're up 15%. Any questions? All right, so how do we help at Tradespoon? So one is a stock forecast toolbox, right? This is the model that basically you can type in any symbols, ETF, stock, and basically look at support and resistance. Still shows downtrend, so it still shows that we are in downtrend. Basically, model predicts that we're not going to break that double top, right? So all things aside, interest rates, Powell, carry trade, based on, trade what you see, not what you think. It is basically saying that, you can get to 565, maybe even 570. But the trend, you can also, get to 550 or 548. So that's stock forecast toolbox, 10-day prediction. You can zoom out to 6 months and look at the long-term trends. Spider's actually, sorry, wrong one. It's still in uptrend. It predicted this month we're going to be at the high point 576, the low 546. Right? Obviously, we reached almost both extremes. But we significantly undershoot the predicted low, right? Almost by what, 30 points, 35 points. So that's 6-7%. So this uptrend is definitely broken. It's not as strong. Like model will rerun in September. So on Monday, or well, Tuesday, when we will come back from the long weekend, this number is going to be less. Like I would be surprised if it's higher, right? Because this trend is broken. So if it saws that by end of the year we can get actually to 600, now probably 576 is going to be your high, maybe 590, right, is your high for the year, and 546 now is going to be maybe 500, 510. So we definitely decelerated this long-term momentum. So the long-term momentums are turning, kind of either neutral or underperforming. So this is something to keep in mind. That's stock forecast toolbox. We do have seasonality chart, right? We talked about seasonality chart. Kind of shows you the double top. Usually, the green line is seasonality. Usually in July we do head higher, then we have a pullback. So we follow in seasonality. And September, October usually bearish, right? You can retest the lows, recent lows. So obviously, we have an election year, so that's also an outlier, but I think something like that will happen in September, October. So seasonality will probably also play a role, especially as we're getting into elections and options expiration. Right? September options expiration is going to be very interesting, right? Because I think because dealers will reposition, right? I think if there's any negative catalyst, then you can have a strong pullback. Right, but until then, we're just going to watch the market. So that's the stock forecast toolbox. That's research. Where do I get these signals? So these three is where I get the signals: active trader, weekly trader, and monthly trader. Right? These are different models that every day gives you trade ideas. Right? So for today, this is active trader, short-term trader. Basically says, well, regional banks are doing well. Looks like oil, energy is rebounding, right? And Bristol Myers, right? Some of the healthcare stocks. So if you don't want to invest into ETFs, it does give you an idea of, some of the stocks that you can trade, right? Like Bristol Myers, right? You can see, you basically, usually I wait five minutes. If you look at the live trading room recording, I wait 5 minutes, right? 3 5-minute candlesticks, right? 1, 2, 3, and then once you see some kind of a support, then you buy, right? And the model basically suggests you can buy at previous close, right, 48.73, or predicted low 48.73, or predicted low 49.72. We never reached 49.72, so a lot of people would open up support ticket, says, Vlad, what if it gaps up, right? What if it gaps up and never reaches your entry point? What do you do then? Then I would say, please follow. The idea of these models is to give you signals, and you need to trade them, right? We give you some cues, right? We suggest to do dollar cost average, only risk less than, 1% at a time. On day trading, less than 1%. On longer term trading, 2.5%. Split your trade into two, right? So if you're doing short-term trading, you probably want to put less than 50 basis points into entry one and less than 50 basis points entry two, right? If you're day trading. If you're holding overnight, entry one, you want to make sure that at the stop, you only down 1% of your portfolio, right? And split the trade into two, right? So that's how you would trade some of these signals. If you're not sure what to do when we have gap up or we have unemployment data, then I encourage you to participate in live trading room, Elite Circle, where I trade these signals, and then you can learn, right, how I do it, how Keith does it, and then you can, do it yourself too. But Elite Circle is actually where you see all of our live trading. You have morning bell and closing bell. You see all of the recordings, and you also enter your phone number and get an SMS message, right? So today, Marvel, right? So yesterday we did Marvel trade at the closing bell. I was able to sell 40 cents. Oh no, sorry, I did the butterfly. I was actually bearish. I thought it would be a negative surprise. So I did put butterfly. I did put put butterfly, and I financed it by sold at the credit call spread. So overall, I collected 10 cents, right? If I was right, which I wasn't, I had bearish bias, then potentially I could have made $2 on this trade, right? The spread, 64.62 spread. On the upside, potentially I could have lost $5 if it did reach, if it stayed above 80, right? Marvel didn't come close, I think. I mean, it got close, 79. It got close to 79, but then it did pull back. And because of the, again, positioning, there was very high positioning at 80, and that's why I put the 80, because the theory is that if the dealers were long the gamma, then once it reaches 80, they will start selling the stock. And that's actually what happened, right? It gapped up, got almost to 80, and now, even though technology is up, the dealers are selling some of their position. So I filled it for 3 cents. So overall, I'm still up, right? Because I financed the trade with 25 cents and I closed it for 18. So small gain, right? Small gain, also relatively small risk, right? You have to have a 2 standard deviation move to the upside, right? It would have to basically break not all-time high, but it would have to break through May high and get close to the March highs. It didn't do that, so this was successful trade. eBay, right? I've been trading eBay. This is an example of a calendar spread, right? You can go to position and type in eBay. Where previous example was earnings. This is basically taking advantage of the time decay, right? So I bought October 55 put because I think the stock is going to kind of trade in the range, right? So if you think that after the earnings, eBay or Marvel, just not going to go anywhere, then you try to take a strategist where you take advantage of time decay. Maybe iron condor, right? Somebody selling call spread, somebody put spread. I think market by October will pull back, so the eBay will pull back at least to the 50-day moving average. So I'm buying October put. But short term, I think at least until September apex, which is going to lose, it's just going to lose premium. And you can see that, it is losing. This is I think second time I sold the put, right? I sold the October 30 put, 56, was able to keep the premium, and now I sold September. We'll try to keep most of the, at least half of the premium, and then I can do the October again. So that's an example of the calendar spread. And also we do individual stock trade. I did NVIDIA earnings same way. Here I was actually able to keep all of the premium, was able to collect half of the percent because I did iron condor. My opinion was we're not gonna have more than one standard deviation move in NVIDIA. And I was right. Same as with Marvel, but I thought Marvel is not gonna do as well. So silver, right? So sometimes I just trade stock only, right? Because I'm bullish on silver, I have been bullish on Eli Lilly, so I try to trade around these positions. And when it drops, when it rallies, I sell, and when it drops, I try to buy. So those examples from the elite circle of different types of trade that I make. If you don't need the tools, you just want to see my trades, we have Shadow Trader. If you just want to do spread trades, right, like I do QQQs, right now I'm trying to get into Apple, then Premium and Spread Trader, right, Premium and Spread Trader. Actually thinking about Apple. What is it trading at? Apple's kind of getting away from me. That was a signal for this week, but it's still 380. Okay, so Apple is still kind of at session high. I was hoping for a little pullback. I mean, all the stocks pulled back except Apple. Microsoft 200-day moving average. NVIDIA below 50-day moving average. Amazon 200-day moving average. Tesla 200-day moving average, and Meta. Meta is the only one above 50-day moving average. So, and Apple, sorry, Apple and Meta. So Magnificent Seven is obviously underperforming. The idea that without these trillion-dollar companies, market is going to have hard to keep rallying just on, Berkshire Hathaway stock that became first trillion-dollar company, non-tech, I think. Berkshire. Yeah. So Berkshire Hathaway, I think all-time high, and actually first trillion-dollar company, 1.02 trillion. So Buffett is still doing something right, so that's good. It's a long weekend, then you should get more bearish. Sounds good. Thank you, Kevin. Sounds good, Kevin. Thank you. I do watch your videos. I appreciate you sending them. Thank you. All right. All right. So today VNO looks like trying to bounce back. Casco, SMTC, NVIDIA looks like losing momentum. JWN, Marvel pullback, MDB. All right, what else? I think that's about it. All right, any other questions? All right, if there are no other questions, let me see. All right, then that's all I have for today. Thank you very much, and I will see you guys. I mean, emerging market corporate bonds I don't really follow that. I mean, I know that US, you can definitely see a strong uptrend in high corporate bonds, high grade, triple A's corporate bonds, LQD, HYG is in strong uptrend, TLT, rallied. So emerging market bonds, I assume, also in trend. I don't know if you know the symbol. EMB. Okay, so charts looks the same. If you want to diversify, obviously fine, but you definitely see a strong uptrend in bonds. People are allocating more and more of their funds into the bonds. And it still kind of has a lot of ways to get back to the 2022 level. So, and it did, it kind of trying to break through this long-term uptrend. So yeah, I mean, bonds right now is the most popular trade because if inflation goes down, bonds should rally. If we have a recession, bonds should rally. So it's one of those last 2 years, they would continue going down no matter what. Now it looks like bonds are going to also continue to go higher no matter what. So that's a very popular trade. And I do think, buying TLT, LQD, EMB makes a lot of sense. Thank you, BJ. Sounds good, Kevin. It's following NVIDIA down now. I mean, I think, right now, you can see that on the good news, usually on the good news, like unemployment data, initial claims, retail data was good. You would think that, market will rally, but, it kind of hasn't gone anywhere, right? It's kind of trading sideways. Every bullish attempt, you get pullback, especially, towards the end of the session. So yeah, that doesn't look like a strong bull market to me. Yeah, QQQ below 50-day moving average. And I think people are right. Where NVIDIA is going is where the rest, right? Because all of these rally, one of the main catalysts, obviously better than expected employment, expanding economy, but it's that AI theme, right? AI theme. And, NVIDIA, $3 trillion company, that makes $30 billion a year, or a quarter. I'm not so sure if it should be a, $3 billion, the most expensive company. So at least for now, from trading perspective, it's a weak chart pattern, right? It's kind of lower highs, right? Triple top, and now below 50-day moving average. You do have a support here at 114, but if we break through yesterday's lows, right? If you break through yesterday's lows decisively, right? The volume is picking up too. Well, then it probably will revisit this 100 level, right? So you just have to kind of be careful. All right, you guys are awesome. Thank you very much. Have a great long weekend, and we'll see you Tuesday.